Yesterday, I did a video that was featuring Paul Tudor Jones in his trading strategy, which basically says never own a stock that is below its 200-day moving average. And with some research, I recognized that 76% of the S&P 500 was under the 200-day moving average, and that was brought to my attention by Homer when he sent me this chart that I shared with you yesterday as well. So what I thought I would do was examine my Bus 12 and Bus 13 portfolios and see what percentage of them were under the 200-day moving average, and then do the same thing to the Dow, and then integrate that into what I call my cheat sheet, which gives me both financial and technical analysis points that I can then create the ability to pretty much give me a feel as to where is the best buy-in on the Bus 12, the Bus 13, and then the Dow. Although I don't think I'll be buying much of the Dow because much like the S&P 500, the Dow, 76% of the stocks are under the 200-day moving average. So according to Paul Tudor Jones, that would say to us, we need to move to the sidelines, we need to get to cash, and that's supported by the other work that I do in financial analysis to see, in fact, how much debt do these companies have, and with increasing interest rates, what is the effect of that on their debt? And what I have basically determined is the cost of their debt is going to go up 2 to 2.5 times what it was last year, and that increased cost will come directly to the bottom line and thus decrease their profits, which will then reflect in their prices. And that is what is basically driving 76% of the S&P below the 200-day moving average, and as well as 76% of the Dow. So the question that I have is, I know what's causing this. It is a slowing down of the economy and increasing of interest rates. So my question comes, is this the world we're going to live in from this point on, and prices will just continue to go down? No, I believe that eventually Powell will say enough is enough. We've got inflation under control. It's down around 2%. Let's let it sit there for a while, and then let's start reducing interest rates. At that point, those stocks that are wrapped up in artificial intelligence, that are going to change our world, that are going to change how we interact with the internet as it answers questions for us and puts us in a better position to make any and all different kind of decisions, creates the atmosphere of a personal assistant that it again makes our whole economy and you and I's lives much more efficient. Well, at that price, these certain companies, and I believe they're the companies that are in the Bus 12 and Bus 13 portfolio, some of them will no doubt fall to the side while others will come in, but I need to have my finger on it, and that's what I do with what I call my cheat sheets. Here's what they look like as of today, and what I do is update them on a daily basis. And again, that's influenced by charts like this. This is one I put out this last week that shows basically the six or seven, the Magnificent Seven stocks that I feel that are going to be the biggest winners in the artificial intelligence world. And I ask myself, what do they have to do to be the big winners? And the answer to that was the same thing they did to become the big winners they are now. And I'm talking about Apple, Microsoft, Google, Amazon, Nvidia, Meta, and Tesla. Well, what did they do in the past to become the big winners? Well, they innovated. How did they innovate, and what was involved in that innovation? And that is research and development. So in this chart, I showed how much are they spending in 2023 on research and development, and what does that represent relative to their income and relative to their revenue? And so I now am able to say, well, relative to income, Amazon is spending 429% of its income this year on research and development. So does that tell me they are putting themselves in a stronger position than Apple, who is spending 31% of their income on research and development? So does that tell me that Apple is not the strong horse it used to be? It has had its day in the dominant phone, the phone du jour of the day, and who is going to dominate and become the number one stock in the future could be Amazon, or it could be possibly Meta, who is also spending a tremendous amount, 127% of its income on research and development, so as to put themselves in the dominant position in the future to deliver artificial intelligence to me. So that's how I analyze stocks. Then what I do is go to my charts, and here's a chart of Apple, and you'll see on here that they have gone under the 200-day moving average just within the last 7 days, and their momentum is going down. Now what I have to wait and see is, what does Tim Cook tell me in the earnings call to give me momentum up or down, such that I can adjust the buy-in price that I think is appropriate for Apple on my cheat sheet. So what I'm trying to do is, I think I have a handle on what the future is going to hold. Artificial intelligence, machine learning. I think I have a handle on who's spending the most to make themselves the dominant player in that. Now, what I have to deal with is, at this point, their prices are going to go down. Amazon's up again today. I think it was at close last week at 128. I think it's up to 130 today, or 132. But it has to deal with not only higher interest rates, and we're going to see some banks fail, and we're going to see some real estate fail, and we're going to see some bankruptcies, and we're going to see some foreclosures on customers. And so that's going to suck down Amazon to, I believe, possibly below $100 a share, and I will watch it on a daily basis, look at the charts, compare it to what else is happening, form in my cheat sheet my daily price that I want to buy Apple at, or Amazon at, or Google at, or any of the other stocks, and make a better investment decision. That's what I'm doing for myself. Okay, if I didn't do videos every day, that's what I'd be doing every day. But what I've also decided to do is to share that information with you. We used to share it on a Discord, but too many people found that the Discord was not really comfortable. It wasn't something that they could react to and basically understand. So we created a website. I went out and spent about $25,000, created a website, Best of Us Investors, and then on that website, I share all this information. And you can go to the website and you can find the different levels of participation that we offer. And then to help along that way, we do a stock talk where we do a Zoom call every Friday, and I answer questions, and Trent answers questions, and Mark is our swing trading expert, which has taught me technical analysis, and that's what we're all about. At least that's what I'm all about. What I want to know, though, is what is it you're looking for? What can I help you do? What I've learned in this world, there's certain things I do well and other things I'm crap at. But what I'm good at is connecting the dots. So that's why last week I made the decision. These companies, these seven companies, are going after this artificial intelligence. They're updating their distribution centers, they're updating their data centers, they're spending a buttload of money. Who's spending the most? And I figured it out. So that's who I watch closely, and then figure out, where do I want to buy it? Because this is going to be the investment opportunity of my lifetime. And I'm 79 years old. So I suspect it's going to be the investment opportunity of your lifetime as well, unless you're older than me. And I guess I don't know when you would have had a better opportunity, even if you're older than me. Okay, I'll think about that. In the meantime, I'll talk to you more about this in the future. And go to into the description, find the link to the BUS 12 or our BUS portfolios, or go directly to the website and join us on this journey.